And one of the challenges for Australian banks is how they view these new entrants. Are these competitors? Is Apple or Google or Samsung trying to steal my lunch, or are they partners? And it's a real tension there. And I guess one of the other places we see that play out is the discussion that we've been having here over the last couple of years, and the UK's and Europe's quite well advanced, is about the relationship between banks and fintechs when it comes to data.
Well, actually, I think a couple of things about that. So, strategically, you have a class of organisations, Apple, Amazon, Google, Facebook, and so on, who are forming a kind of layer. The customer is in the world of Apple, the world of Google, the world of Facebook, and it's becoming increasingly more tempting for them just to stay inside that world and not come out. And that is problematic for banks, because if banks don't get that data, if they don't see what you're doing, where you're going, how are they going to provide you with better services? So you can see that sort of problem. Now, as it happens, I think it's plausible that the results of the Australian regulator investigations, Productivity Commission, around access to data may well go down a similar route to the EU and the UK, where it becomes mandatory for banks to provide the API interfaces so that third parties can get access to data. Those third parties would, of course, include Facebook and Amazon and Google. And that's potentially a big threat. So I understand that completely. On the other hand, it means banks can make new services that they don't have now, because they themselves will have access to other people's data as well. So, they could have an entirely negative and defensive reaction to this, and I think the European banks did initially. But I think that's sort of changing a bit now. It's if we're negative and defensive, we're just kind of handing it all over to Facebook and Apple and Google. It's time to have some better strategies to find services that we can deliver into that integrated, API-centric, appified space that other people will want. Not because they have to use us, but because they want to use us to do these kind of things.
So my sense is you think there's more for banks to gain than there is to lose in this discussion?
Well, I think, there are certain things that banks can't defend. We all understand the margins on payments are going to carry on going down. We all understand it's going to be about value-added services rather than themselves. Now, the question is, what kind of things could banks do that people like Facebook and Apple would find harder to do? And so for that, you want to look into sort of regulated spaces, obviously, but probably for the non-payment stuff, the non-monetary stuff. And, I'm very much of the opinion, and actually APCA and the Australian Payments Council have been thinking in that same direction. I'm not the only person that thinks this, that there might be services around identification, authentication, authorization that actually provide the next generation of banking services. If anybody can do payments, then go and do the hard stuff instead. And the hard stuff is knowing who you are, right? It's the KYC and the kind of things banks already do. Finding ways to turn those into services in the new economy, what you might loosely call digital identity services, strikes me as being a reasonable strategy. There's some definite ways forward there.